Welcome. Today we're diving into the world of return on investment, or ROI. This simple yet powerful metric helps investors and businesses understand how well their money is working for them. Whether you're running a small business or managing personal finances, knowing your ROI can guide smarter decisions. In this video, we'll explore what ROI means, how it's calculated, and why it's so important for evaluating the efficiency of any investment. Let's get started by breaking down the basics of ROI and setting the stage for deeper insights throughout our journey. Return on investment, or ROI, is a key performance measure used across industries. It tells you how much profit you've made compared to the amount you originally invested. Think of it as a way to measure the bang you get for your buck. ROI is especially useful because it's straightforward and can be applied to almost any investment, from stocks to marketing campaigns. By understanding ROI, you can quickly compare different opportunities and make informed choices about where to put your resources. Calculating ROI is simple. The formula is ROI equals net profit divided by the initial investment cost. For example, if you invest $1,000 and earn $1,200, your net profit is $200. Divide that by your original $1,000 investment and you get an ROI of 0.2 or 20%. This percentage shows how efficiently your investment has performed. The higher the ROI, the better the return. This formula is a universal tool for comparing different investments, big or small. ROI isn't just a number, it's a decision-making tool. Investors, business owners, and even individuals use ROI to weigh the potential benefits of different opportunities. By comparing ROI across options, you can focus on what brings the most value. It helps you avoid wasting resources on low-performing investments in spot areas where your money works hardest. In a world full of choices, ROI keeps your strategy sharp and your goals clear. You don't have to be a financial expert to use ROI. Everyday decisions like buying a new appliance or choosing a service can benefit from ROI thinking. For instance, if a more expensive washing machine saves you money on repairs and energy over time, its ROI might be higher than a cheaper model. By applying ROI to daily choices, you make smarter, more cost-effective decisions that add up over time. Businesses rely on ROI to evaluate everything from marketing campaigns to equipment purchases. By tracking ROI, companies can see which projects deliver the most profit and which ones need improvement. This helps allocate budgets more effectively and drives better results. For example, if a marketing campaign costs $5,000 and brings in $10,000 in sales, the ROI is 100%. Such insights are crucial for long-term growth and sustainability. Marketing teams often use ROI to measure the success of their campaigns. By comparing the money spent on advertising to the revenue generated, marketers can see which strategies are most effective. This allows them to adjust their approach, focus on high-performing channels, and cut back on less successful efforts. Ultimately, ROI helps marketing professionals maximize the impact of every dollar spent. Investors use ROI to compare different investment opportunities, such as stocks, bonds, or real estate. By calculating the ROI for each option, they can identify which investments are likely to yield the best returns. This approach reduces risk and helps build a more profitable portfolio. Whether you're a seasoned investor or just starting out, ROI is a valuable tool for making informed decisions. While ROI is a great indicator of performance, it's important to consider risk. High ROI investments can sometimes carry higher risks. Balancing ROI with risk assessment ensures you're not just chasing big returns, but also protecting your capital. Smart investors look for opportunities with strong ROI and manageable risk, creating a balanced and sustainable investment strategy. ROI is a useful metric, but it's not perfect. It doesn't account for the time value of money or other factors like risk and market conditions. For example, two investments might have the same ROI, but one takes twice as long to achieve. In such cases, other metrics like internal rate of return (IRR) or net present value (NPV) can provide a more complete picture. Always use ROI alongside other tools for the best results. Now let's shift gears to market research. This process involves gathering, analyzing, and interpreting information about a market. It helps businesses understand their target audience, competitors, and overall market trends. Effective market research is the foundation for making informed business decisions, launching new products, and staying ahead of the competition. Let's explore how market research works and why it's so valuable. Market research is all about collecting and studying data to understand a specific market. This includes learning about potential customers, their needs, preferences, and buying habits. It also involves analyzing competitors and identifying market gaps. By doing thorough market research, businesses can make smarter decisions and tailor their products or services to better meet customer demands. There are two main types of market research: primary and secondary. Primary research involves collecting new data directly from sources like surveys or interviews. Secondary research uses existing data, such as industry reports or competitor analysis. Both types are important for building a complete picture of the market and making well-informed decisions. Market research process typically follows several steps. First, define your objectives. What do you want to learn? Next, design your research plan and choose your methods. Then, collect and analyze the data. Finally, interpret the results and use them to guide your business strategy. Each step is crucial for turning raw data into actionable insights. Before starting any research, it's important to clearly define your objectives. Are you trying to understand customer preferences, test a new product idea, or analyze competitors? Clear goals help focus your research and ensure you gather the right information. This step sets the direction for the entire process and increases the chances of success. There are many ways to gather market data. Surveys, interviews, focus groups, and observations are common primary research methods. For secondary research, you might use industry reports, competitor websites, or government statistics. Choosing the right methods depends on your objectives, budget, and timeline. The right mix ensures you get reliable and relevant data. Once you've chosen your methods, it's time to collect data. This might mean sending out surveys, conducting interviews, or gathering information from online sources. Accurate data collection is essential for meaningful results. Make sure your sample is representative and your questions are clear to avoid bias and errors. After collecting your data, the next step is analysis. Look for patterns, trends, and insights that answer your research questions. Use charts, graphs, and statistical tools to make sense of the information. Good analysis turns raw data into valuable knowledge that can drive business decisions. Interpreting your findings is about understanding what the data means for your business. Does it reveal new opportunities, highlight risks, or suggest changes to your strategy? Clear interpretation helps you turn insights into action, ensuring your research leads to real-world improvements. The final step is applying what you've learned. Use your research findings to shape marketing strategies, develop new products, or improve customer service. The best market research leads to actionable steps that help your business grow and succeed in a competitive market. Knowing your target audience is a core part of market research. This means understanding who your customers are, what they need, and how they make decisions. By building detailed customer profiles, you can tailor your marketing and product development to better meet their expectations and boost satisfaction. Competitive analysis is another key aspect of market research. By studying your competitors' strengths and weaknesses, you can identify market gaps and find ways to differentiate your business. This knowledge helps you stay ahead and adapt to changing market conditions. Keeping an eye on market trends is essential for long-term success. Trends reveal shifts in customer preferences, emerging technologies, and new opportunities. By staying informed, you can adapt quickly and position your business for future growth. Surveys are a popular tool for gathering customer feedback. They can be conducted online, by phone, or in person. Well-designed surveys provide valuable insights into customer satisfaction, preferences, and expectations, helping you make data-driven decisions. Interviews allow for deeper conversations with customers or industry experts. They provide qualitative insights that surveys might miss, such as motivations, opinions, and detailed experiences. Interviews are especially useful for exploring complex topics and uncovering new ideas. Focus groups bring together a small group of people to discuss a product, service, or idea. Facilitated by a moderator, these sessions generate rich feedback and spark new ideas. Focus groups are great for testing concepts and understanding group dynamics. Observational research involves watching how customers interact with products or services in real-life settings. This method uncovers behaviors and preferences that people might not express in surveys or interviews. It's a valuable way to gain authentic insights and improve user experience. Secondary research uses existing data from sources like industry reports, government publications, and competitor websites. This information is often readily available and can provide valuable context for your primary research. Combining both types gives you a well-rounded view of the market. Studying competitor data helps you understand their strategies, strengths, and weaknesses. Look at their product offerings, pricing, marketing tactics, and customer reviews. This analysis can reveal opportunities for your business to stand out and capture more market share. Market research helps you spot gaps where customer needs aren't being met. By identifying these gaps, you can develop new products or services that fill them, giving your business a competitive edge and opening up new revenue streams. Before launching a new product or service, market research lets you test ideas with real customers. This reduces the risk of failure and ensures you're meeting actual market demand. Early feedback helps refine your offering and increases the chances of success. Market research provides insights into what customers are willing to pay and how competitors price their products. This information helps you set competitive prices that maximize sales and profits without undervaluing your offering. Effective market research guides product development by revealing customer needs and preferences. By listening to your target audience, you can create products that truly solve their problems and stand out in the market. Market research helps you understand what customers value most. By acting on this information, you can enhance customer experience, build loyalty, and encourage repeat business. Happy customers are more likely to recommend your brand to others. Markets are always evolving. Regular market research keeps you informed about shifts in customer preferences, new technologies, and emerging competitors. Staying adaptable ensures your business remains relevant and competitive. Segmenting your market means dividing it into smaller groups based on shared characteristics, such as age, location, or buying habits. This allows you to target each segment more effectively with tailored marketing and products. Creating customer personas helps you visualize your ideal customers. These detailed profiles include demographics, interests, and pain points. Personas guide your marketing and product development, ensuring you meet real customer needs. Ongoing market research helps you track changes in your industry. By monitoring trends and customer feedback, you can quickly respond to new challenges and opportunities, keeping your business agile and forward-thinking. Market research helps you determine which marketing channels are most effective for reaching your audience. By analyzing data from different platforms, you can focus your efforts on what works best and maximize your return on investment. Customer satisfaction surveys and feedback tools provide direct insights into how well you're meeting customer needs. High satisfaction leads to loyalty and positive word of mouth, while low satisfaction signals areas for improvement. Market research helps you predict future demand for your products or services. By analyzing past sales, market trends, and customer feedback, you can make more accurate forecasts and plan your inventory, staffing, and marketing accordingly. Before expanding into new markets, thorough research is essential. Understanding local customer needs, regulations, and competition helps you tailor your approach and increase your chances of success in unfamiliar territory. Keeping an eye on your competitors' actions helps you anticipate changes in the market. By monitoring their product launches, marketing campaigns, and pricing strategies, you can adjust your own plans and stay competitive. Market research isn't a one-time task. Continuous research helps you adapt to changing customer needs and market conditions. By regularly gathering and analyzing data, you can keep improving your products, services, and strategies. Wrap up: both ROI and market research are essential tools for making smart business decisions. ROI helps you measure the efficiency of your investments, while market research provides the insight needed to understand your market and customers. By combining these approaches, you can maximize your returns, reduce risks, and build a successful, sustainable business. Thanks for joining us on this journey to smarter decision making.